Not all home loans are created equal. They come in various shapes and sizes, each with its own set of terms, conditions, and interest rates. Understanding these differences is crucial to making a sound financial decision, and picking the wrong one for your home can cost you big. A seemingly small difference in interest rates or loan terms can translate into thousands of dollars over the life of the loan. It's a decision that can impact your financial well-being for years to come. The world of home financing is full of confusing terms and hidden pitfalls. From APR to points, amortization to escrow, the jargon alone can be overwhelming. It's easy to get lost in the details and make a decision you later regret. But with the right knowledge, you can find the loan that fits your needs. By understanding the different types of loans available, the terms and conditions associated with each, and your own financial situation, you can navigate the home financing process with confidence. I'm Kris McCullough, retired Marine and leader of a team that specializes in tough home loans, especially for manufactured homes. We've seen it all, and we know how to navigate the complexities of the mortgage market to find the best solutions for our clients. Our experience allows us to provide tailored advice and support throughout the entire loan process. We believe homeownership is part of the American dream, and our job is to clear the path for you. We're here to simplify the process, answer your questions, and provide the guidance you need to make informed decisions. We'll work with you every step of the way to ensure a smooth and successful home buying experience. This guide is your no-nonsense introduction to manufactured home loans, plain English, no fluff. We'll cut through the jargon and provide you with clear, concise information that you can actually use. No complicated formulas or confusing legal terms, just straightforward explanations that will empower you to make the right choices. We'll break down home types, loan options, and what you need to get from just looking to welcome home. We'll guide you through the entire process, from understanding your financing options to finding the perfect home and closing the deal. By the end, you'll know the difference between a mobile and manufactured home, why land matters, and which loans are built for buyers like you. Whether you're a first-time home buyer or a seasoned investor, we'll help you find the financing solution that's right for your unique circumstances. Let's get to work. Let's unlock the door to your dream home together. Let's clear up a big confusion that often arises in the world of housing, especially when we're talking about affordability in manufactured homes. It's a distinction that can significantly impact your financing options, the value of your property, and even the overall quality of your living experience. Mobile home and manufactured home aren't the same thing, despite the terms often being used interchangeably in casual conversation. This is a critical point to understand, as the differences are more than just semantics. They represent a shift in building standards, regulations, and ultimately, the quality and safety of the homes themselves. The dividing line is June 15, 1976. A seemingly arbitrary date, but one that holds immense significance in the history of manufactured housing. This is the day that everything changed. It was when HUD, the Department of Housing and Urban Development, stepped in and set national building codes for manufactured homes. This was a pivotal moment, marking a clear distinction between what came before and what came after. Homes built before that date are classified as mobile homes, a term that often carries a certain stigma due to the construction standards of the time. These homes were built to less stringent standards, often lacking in safety features and durability. Because of these factors, mobile homes are often harder to finance, considered a higher risk investment by lenders, and as a result, most lenders tend to avoid them altogether. Securing a loan for a pre-1976 mobile home can be a significant challenge. Homes built after June 15, 1976 are manufactured homes, and they represent a completely different standard of quality and safety. These homes are built to strict HUD standards, ensuring a higher level of safety, durability, and overall quality. The HUD code covers everything from structural integrity to fire safety and energy efficiency. Because of their adherence to these standards, manufactured homes are eligible for a wider range of loan options, making them a more accessible and attractive option for many homebuyers. That date, June 15, 1976, determines everything. What types of loans you qualify for, opening doors to possibilities that might otherwise be closed, your interest rates, potentially saving you thousands of dollars over the life of the loan, and ultimately, how complex the entire home buying process will be. So, know the build date before you fall in love with a property and start envisioning your future within its walls. Post 1976 means more rules, regulations, and oversight during the construction process, translating to better quality construction and materials, ensuring a more durable and long-lasting home. And as we've discussed, more financing options, making homeownership more attainable. Lenders will always ask. It's one of the first questions they'll need to know to assess your eligibility. When was it built? This simple question unlocks a wealth of information. That answer shapes your entire loan journey, dictating the path you'll take and the challenges you might encounter. So check the data plate. It's usually located inside a cabinet, near the electrical panel, or on the exterior of the home. Do this before you get attached, to avoid potential disappointment and ensure a smoother, more informed home buying experience. Next, let's talk about the land. Is your home real estate or personal property? It's a huge difference. If you own the land and the home is permanently attached, it's real estate. You get traditional mortgage options. If you don't own the land, like in a park, it's personal property financed with a chattel loan, more like a car loan. Real estate loans mean longer terms, lower rates, and tax benefits. Chattel loans have shorter terms and higher rates. Neither is bad. They're just built for different situations. Know which path you're on before you start. If you own the land and the home is permanently attached, you're in the best position for financing. The home must be on a permanent foundation, the title surrendered, and the home recorded on the property deed. This unlocks FHA, Virginia, USDA, and conventional loans, longer terms, lower rates, and lower down payments. It's more work up front, but you get a more valuable asset and better loan terms. This is the path to building equity and long-term stability. If you want the full benefits of homeownership, make sure your home is real property. It takes coordination, but the payoff is huge. Put down roots, literally and financially. Chattel loans are for homes in parks or on land you don't own. The loan is for the home only, not the land. Think of it like a car loan. Interest rates are higher, terms are shorter, 15-25 years, and the home is considered personal property. The trade-off: lower upfront costs and a faster payoff, but higher monthly payments. Chattel loans make homeownership possible for many who can't buy land right away. It's a different tool for a different job. If you want the home but not the land, this is your path. If your home is real property, you can choose from the main loan programs. FHA loans, low down payment, 3.5%, flexible credit requirements, great for first-time buyers. VA loans for veterans and service members, 0 down, no PMI, and some of the best terms available. USDA loans for rural areas, 0 down if you meet income and location requirements. Conventional loans, stricter credit and down payment requirements, but often lower rates and no PMI with 20% down. Each program has its strengths. Pick the one that fits your situation. Government-backed loans open doors for many buyers. Strong credit and savings, conventional might be your best bet. Military service, VA is unbeatable. Rural property, check USDA eligibility. Now it's your turn under the microscope. Lenders check your income. Steady paychecks or 2 years of self-employment history. Credit score matters. FHA can go as low as 580. Conventional usually needs 620 plus. Chattel loans may accept lower, but higher is better. Debt-to-income ratio, DTI, should be under 43-50%. They want to know you can handle the payments. Cash reserves, you'll need money for down payment and closing costs, 2-5% of the loan amount. The better your financial picture, the better your loan terms. Know your numbers before you apply. Work on your credit and savings if you need to. Lenders want to see you're ready for homeownership. It's all about proving you're a safe bet. The home itself must meet strict requirements going beyond just basic livability. We're talking about adherence to specific codes and standards that ensure safety, durability, and overall quality. These requirements cover everything from the structural integrity of the home to the materials used in its construction. For loan approval, lenders need assurance that the home is a sound investment, and meeting these requirements is a key factor in their decision-making process. They'll scrutinize every aspect of the home to ensure it aligns with their lending criteria. HUD data plate. This is essentially the home's birth certificate, containing vital information about its construction and compliance with HUD standards. It's a crucial piece of documentation that lenders and inspectors will rely on. And certification labels, tags, must be present. These tags are like stamps of approval, verifying that the home has been inspected and meets the necessary safety and quality benchmarks. They're typically found on the exterior of the home and serve as a visual confirmation of compliance. These prove the home meets federal standards. These standards are put in place to protect homeowners and ensure a consistent level of quality across all manufactured homes. Without these certifications, securing financing can become significantly more challenging. Missing tags? This is a red flag that should be investigated immediately. It could indicate that the home doesn't meet the required standards, or that the tags have been removed improperly. Getting a loan is tough, especially when dealing with manufactured homes. Lenders often have stricter requirements for these types of properties, so it's essential to be prepared and ensure everything is in order, and may require extra steps. Be prepared to provide additional documentation and undergo more thorough inspections. The more information you can provide up front, the smoother the loan process will be. Check for the data plate inside. It's usually located in a kitchen cabinet, electrical panel, or near the main entrance. Make sure it's legible and contains all the necessary information, and tags outside before you move forward with the purchase. Verify that the information on the tags matches the data plate and other documentation before you commit. A thorough inspection can uncover potential problems and save you from costly repairs down the road. It's a small investment that can provide significant peace of mind. For real estate loans, the home must be on a permanent foundation. This means it's attached to the land in a way that's considered permanent, typically with a concrete foundation, with proper tie-downs. These are crucial for securing the home to the foundation and preventing damage from wind or other natural disasters. An engineer may need to certify this. They'll assess the foundation and tie-downs to ensure they meet the required standards and are properly installed. The foundation is what turns a manufactured home into real estate, making it eligible for traditional mortgage financing. Without a permanent foundation, your financing options may be limited. The title must be clean, meaning there are no outstanding claims or disputes against the property. No liens, and retired if you're combining home and land. Retiring the title essentially merges the home and land into a single piece of real estate. For chattel loans, the lender will place a lien on the title, just like a car. This means they have a legal claim on the home until the loan is fully repaid. All paperwork must be in order for the loan to close. This includes everything from the purchase agreement to the title documents and inspection reports. Don't skip these details. Overlooking even seemingly minor details can lead to delays, complications, or even the denial of your loan application. They can make or break your deal. Paying attention to these factors will significantly increase your chances of a successful and stress-free home buying experience. You've got the basics. Now what? Don't try to navigate this alone. Every borrower and property is unique. A loan officer who specializes in manufactured homes is your best ally. They know the pitfalls and can guide you to the right loan for your situation. Home ownership is about more than numbers. It's about building your future. Don't let the process intimidate you. Start a conversation with a pro, ask questions, and share what you've learned. Visit KrisMcCullough.com for tools, advice, and more info. Drop your questions in the comments. We're here to help. With the right knowledge and team, you can make this happen.